Hi, everyone. Thank you for joining us today. My name is Deepti, and I'm an Associate Director for Global Mortgage Group, and I will be your host for today's webinar. This evening, we will be talking about investing in US real estate from overseas, the outlook in 2022, the types of properties available, and how to obtain US mortgages as foreign nationals and expats. Our first speaker for the day is Steve Smith. He is the CEO of America Dream Houses and has been in real estate for over 20 years, assisting his clients through the whole process from finding the right home, arranging inspections, legalities, and finances. Hi, Steve.
Hi, Dipti, how's it going? Welcome to everybody for today.
So our second speaker, Dustin Klatt, has been a real estate agent in Orlando area for over 10 years, specializing in investment properties, first-time home borrowers, and new construction in Orlando. And in-house, we have, hi, Dustin, say hello to everyone.
Hey, Dipti.
Okay, and Dustin, and in-house, we have Robert Chadwick, our third speaker. He is the CEO and co-founder of America Mortgages. He has over 25 years of wholesale mortgage lending experience, and his comprehensive knowledge of international mortgage market has helped us become a global leader in the US mortgage origination. Hi, Robert. Say hi to everyone.
Hey, guys. Thanks for joining.
Okay, so let's get started. When we conclude, we will be concluding with an interactive Q&A. So just use the chat option or the Q&A option to ask any questions, and we will be answering them live. So Steve, over to you.
Right, thank you, Dipti, and we'll get underway. So can everybody see that now? Yeah, we're all good. Okay, so just before I start, the usual disclaimers, general information, not providing, investment advice because it needs to be tailored to everybody's personal requirements, and it's always important to seek professional advice. So I'll talk a little bit about our company, USA Dream House. We've been, sorry, I should just say the agenda. So I'll be talking first, and Dustin and Robert. So we've been doing US real estate and assisting overseas investors since 2010. And we provide pretty much a full service. That is, we source the properties on behalf of our clients. We assist them through to closing. And if they want to sell later, we can assist with that too. We assist with the inspections, the legal side, and the accounting. Now, why do we think US property is a great investment opportunity? Well, we think because of the value of it. It's a diversification in assets and currency advantages. I mean, having lived in Asia for a long period of time, I've lived in Hong Kong for quite a period where you might have like a 500 to 600 foot square apartment, which might be, I don't know, $2 million, for example. Well, for that sort of money in the US, that goes a lot further. So, I think it's an advantage to look at other markets, other opportunities where there's potential. Now, in terms of property markets, of course, the numbers will vary. But if, for example, you say in the US market, an average price for a single family home is around, say, $350. Of course, that depends on which state and area. And say around 200,000 or more, could be another up to 300 or so for townhouses and apartments. Now, you've probably noticed over the last 12 months or so, there's been quite a lot of capital growth. I mean, around the world, there's been a lot of capital growth, but the US has been a major market for growth. And the other thing too about the US market is there are low buying costs. In other markets, say for example in Australia, you have to pay what's called stamp duty. Now that stamp duty is dependent on the value, and it varies between state to state. In some states, say for example in in the state, in New South Wales state, the average house might be, say, $1 million, but you're going to have to pay maybe $80,000 to $100,000 in stamp duty. Well, that in the US, that's typically, you don't have to pay those sort of exorbitant fees to get into that particular market, depending on which state. So we think the buying cost is quite low. In addition, the ongoing cost to run that is also fairly low. For example, as I said, I'm just using an Australian example because I know the Australian market fairly well. In some states, you might have to pay what's called a land tax. And that might be, say, for example, in some cities in Australia, you're paying maybe $4,000 to $8,000 a year in land tax. It could be more. Well, in Florida, you don't pay that sort of exorbitant fees. So that's another reason why we think that the US is a particularly interesting market. In addition, renovation costs are fairly low. So in order to fix up the apartment, I mean, some people you've probably heard of, you've probably seen on HGTV or whatever, people go and flip. They buy a house, they fix it up, and then they flip it, right, for a profit. Well, in some countries, just fixing up a place can be very expensive. In the US, it tends to be a lot cheaper to do that, and hence, when you're buying in a place which is relatively lower cost compared to some of the other markets, you can get very good yields on these places. In addition, there's a strong demand for tenants. There's a shortage. Also, capital gains tax may be deferred. It's always important to have a good accountant when you're getting into these sorts of things, and we've got a good accountants who can provide advice and also assisting with tax filing. Some people, for example, I know in Hong Kong, have this view that, once you buy something in America, you're going to be liable for your global income. Well, that's not the case, right? If you're not a US citizen, you don't need to do that. So we have ways and means of dealing with that, with the tax issues, with professional accountants. Now, the last 2 years, and we've all been locked in COVID, okay? We've all been locked in our homes for periods of time, and people have been looking at their screens, looking at websites like Trulia and Zillow in the US, and having a look at, okay, well, what am I, can I do in investing from home? And there's been a surge in demand for purchasing properties. And they might want to move to something a bit bigger because they're working from home. And there's also been a trend for people to move from the Northeast and places like California to somewhere where it's maybe a bit warmer and also a lot cheaper. Bigger bang for the buck, right? And they can buy bigger places. So, as an example, I've got a friend that moved from New York, where she had a 1-bedroom apartment, which is like $1 million, and then she bought this huge, great house in Texas, right? So there's been this flow of movement. In addition to that, low interest rates. They've been extremely low. That's helped people get into mortgages, and big, strong demand, but there's also low inventory. So if we look at this figure from Zillow, you can see that the numbers of houses on the market have decreased substantially from around 2020, when there's probably about 1.8 or so million on the market, to now there's only about 1 million on the market. There's a strong demand, but there's an inventory issue. Then you look at appreciation of prices. So in 2018, an average of say 6%. The last 12 months was about 17%. And you look at the median house price, that's gone up from say 300 to around the 350 mark, right? So you can see that the pricing has continued to climb. Now this is an interesting, it's a busy map, okay? So excuse that, but you can see here since 2020 to November 21, the house, the different states have increased by different values over time, but you can see substantial rates through COVID. So if we're looking forward to 2022, where's the sort of demand? Well, the demand still is in places which are in the sort of, Arizona is one of those in the Midwest, but you've also got that sort of move to the south, the southeast part of the US. So places like Florida, North Carolina, South Carolina, and Texas. So those are the sort of states that we think will continue to grow, which are tipped to continue to grow And so there will still be strong growth in those areas over the next 12 months. Now, just a little bit about the types of sales of houses that we deal with. So there are three types of sales that we deal with in the market. Which one is the sort of traditional sale? You see a house on Zillow or Trulia, and you say, okay, I'd like to buy that, and that's on the secondary market, and we can obviously assist with those. The other two types are called foreclosures and short sales. Now, a foreclosure is where the bank it wants to take over that particular property, and then we've done quite a few of those in the past, and we can assist with that with dealing with the bank. And a short sale is where the bank and the owner are still negotiating over what to do and negotiating over the sales price. That can take a little bit longer to do, and we have done those as well. So we can deal with all these different types of sales.
Steve,
yeah.
Can we just take a quick second before we continue? I think you're in the from beginning mode for the slides.
Yes.
Do you mind changing it to presenting so people can see you while you speak?
Oh yeah, sure. How do I do that?
Oh, just cancel the presentation.
Yeah.
Just cancel it.
Yeah.
Then restart again.
Yeah, sure.
And then just go to the presenting. Never mind. We'll do that later.
How do I? Oh, I'm sorry.
No, it's okay.
Can you see the presentation clearly?
Yes, we can see the presentation.
Oh, okay.
Sorry, guys.
Oh, I'll need some teaching from you later. Thank you, Dipti.
For sure. For next time.
For next time, exactly. All right. So let's see. I'll just go back.
Types of properties.
Yes, the types of properties. Oh, wait a minute. Yes. So this is sort of how we work. Oh, yeah, we'll go to the types of sales: traditional, short, and foreclosure, and then how it works. We sign an agreement and get a fee for the get underway. Then we help set up through our partners. We help set up a US company and tax ID. That's very important because that's can assist you with not only risk reduction, but also in terms of tax advantages later on, particularly when you're buying and selling, particularly from people from overseas. Then we identify the price range and get a mortgage pre-approval, like a proof of funds. We work with you to find the right place and negotiate the price. And once the sale is approved, the deposit is paid to the legal firm, which is a title office. They call it a title office there. And then we work with the firm, with the legal company, the title office, and the mortgage partner for settlement. We arrange a house inspection and the report, and then once it's closed, assist with the property management through partners, and then the property manager assists in making payments to your bank accounts. And then we have professionals looking after the accounting side and US tax returns. And this is our details. We have our own website, which has a direct feed from the MLS with regards to properties that are listed. So it's a live feed. So with that with a short overview of the US property market, I'll hand it over to Dustin.
All right. Well, good morning, everybody from Florida. Can everybody still see the slides with me talking here?
Everyone can see the slides.
Okay, perfect. Well, I appreciate you taking the time to join us today. My name is Dustin Klatt, and I've been a real estate agent here in Orlando, Florida for the past 9 years. I love helping people find their dream home as well as investment properties to help build generational wealth for their families. And I'm very excited to share with you an overview of the Orlando real estate market, as well as some of the available properties we currently have for sale. Next slide, please. All right, so here are the 4 items I'll be touching on today. I'm going to touch on why Florida is currently the best state to invest in and give an overview of the Orlando real estate market by the numbers. show you the different areas of Orlando you can invest in, and finally, show you 6 properties we currently have on the market for sale. So why are people moving to Florida? We actually have about 1,000 people moving to the state every single day, and here's why. One of the main reasons is our economy and the fact that Florida has no state income tax, which makes it a very favorable state to live and work. A huge reason for this is the amount of money that comes in from the tourist industry. In 2019 alone, Orlando had over 75 million people, and that's pretty typical for a non-COVID year. And it's a very business-friendly state. Florida was one of the first states to open back up after the initial COVID lockdowns. Also, the next reason is because the value of Florida homes. I recently did a webinar where I showed the difference between what $500,000 gets you in Orlando versus Los Angeles and New York. In Orlando, it was a 5-bedroom house in a growing area, while in New York, it was a 600 square foot condo, and in Los Angeles was a small 2-bedroom house. And with 1,000 people moving to the state every day, demand for rentals is increasing, and so are the rents. Next slide. If there's something you want to do, you can find it in Florida. We are the theme park capital of the world, and you are never more than 60 miles from the ocean. Lastly, let's not forget about the weather. There's a reason we're called the Sunshine State, as we have sunshine and warmth year round. And like I said before, you're never more than 60 miles from the ocean. Next slide, please. So here is an overview of the Orlando real estate market in terms of numbers. Like most of the country, we are in a very strong seller's market. However, with the right offer, we're still getting deals done. At this time last year, we had over 4,800 listings or 4,800 properties for sale. And last month, we only had 2,600. We did have about 2,800 new listings come available, and we sold 3,800. So if a property is priced right, it is selling very quickly. And selling quickly with an average of 31 days on the market. Next slide. When it comes to Orlando and where to invest, I like to break it down into 4 categories. Obviously, there are opportunities everywhere, but I don't have enough time to touch on all the areas. If you'd like more information regarding an area I don't touch, feel free to reach out to us. So the first area is around the theme parks, especially Disney World. This includes Kissimmee, Haines City, Davenport, and the huge growth area of Claremont. This is where you will find most of the short-term or vacation homes. You can also rent long-term in these areas, as there are people who work in the area and need a place to rent. Disney alone has 75,000 employees just in Orlando. The next area is around the University of Central Florida. UCF is the largest university in the US with nearly 72,000 students. So you're going to find a ton of student rentals in this area. If you have a student looking to attend university yourself, whether in Florida or elsewhere, buying a home for them to live in while in school is a great way to increase your net worth. I recently did a webinar on this as well if you'd like more information. So the areas surrounding UCF, Oviedo, and Seminole County are also markets of huge growth as their primary schools are some of the top in the state. Next is Lake Nona. This is one of the hottest growth markets around. Disney just announced that they'll be moving 2,000 of their employees, their corporate employees, from California to Lake Nona, and will be investing $864 million for their new campus in the area. Not to mention all the other amazing companies that are moving to the area. Lastly is downtown Orlando. We have a gorgeous downtown and people love living there. Downtown rents are some of the highest around, so if you can find a property in the area, expect a good return. Next slide, please. So what type of properties can you invest in here in Orlando? You have the option of single family, which are standalone homes, multifamily, which are more than one residential unit, including apartment buildings, commercial, and land. I wanted to give a few examples of some properties we have listed as well as the kind of return you can expect. So if you're interested in any of these properties, please let me know as they're all currently available. So the first one we have here is a 2-bedroom, 2-bath townhome. This is in that hot Lake Nona market that I was telling you about. The current rent is $1,600 a month. However, rents are going up, so when it can be rented again, that rent is going to go up. And this one actually has a low HOA fee too. The return is a little bit lower on this one, but because it's in that hot Lake Nona market, we're going to see great appreciation over the coming months and years. So this house here is a 4-bedroom, 3-bath home in Claremont. It is priced at $322,000, and it's near the new Olympus campus, which is a huge sporting complex that they're putting in Claremont. And like I mentioned before, this is a huge growth area. Projected rent on this about $2,000 a month. Now, one other thing, when I mentioned before that our listings are down quite a bit, so there's not as many resales on the market. So a lot of people are looking at new construction. And new construction is a great way to get into investing in Orlando without having to compete with all the other buyers. So this one here is a great opportunity. It's a 3-bed, 2-bath and priced at $308,000. The projected rent is about $1,800 and it comes brand new. So you get everything brand new with builder's warranties, so you don't have to worry about repairs for many years down the road. Again, this is another new construction in the same area. This is close to Disney World, probably 30 minutes away. 4-bedroom, 2-bath home, and the potential rent I think is a little bit low on this, and I would expect it to be more around $2,200. So again, you get those builder's warranty on new construction. This is one of my favorite opportunities. It's in Cocoa, Florida, which is on the Space Coast. It is 11 duplex properties, which are 100% occupied, and it's bringing in about $18,000 a month. So each duplex is selling for $225,000, and I've spoken with the owner, and he's willing to sell them individually or as a portfolio. But if you're looking for something that's fully occupied, each unit is getting about $800 or $900 a month. So this is a very solid opportunity. If you're looking for something a little bit larger, this is a 21 unit complex in Dade City. Again, it's 100% occupied. All these units have been renovated. And when you get into the larger properties, you get a higher return because you have those economies of scale where you only have 1 or 2 roofs, not 21 roofs of single family homes. So if you're looking to invest a little bit more money, this could be a good option for you as well. And this is very similar as well. These are 48 units fully renovated on the Space Coast. So they're investing heavily into our Space Coast, which is Titusville, Cape Canaveral, Cocoa. And these are all renovated units. So if you're looking for a larger property with those economies of scale, this is also a very great option. So that's all I have. I'll turn it over to you, Robert.
Thanks, Dustin. Thanks, Steve. Hi, everybody. My name is Robert Chadwick, one of the co-founders of American Mortgages. Thanks for taking the time this evening or in the morning, whatever time you're joining for our webinar. Steve, you go to the next slide. So I'll touch on a few things, but I think really one of the biggest questions that we get is, how easy is it to obtain financing for U.S. real estate without any U.S. footprint? And I think it's likely easier than getting a mortgage in your home country. So just to kind of give you an example, we do not need U.S. credit. So you need credit from whatever country you're in. So as an example, if you're in Australia, you're in Hong Kong, wherever you may be, you can use your local credit report in lieu of having U.S. credit. So the big factor which a lot of people think that keeps them out of the U.S. market is not having credit exposure. It's absolutely not the case. In the event you're in a country, say the UAE, that doesn't actually have a credit reporting agency, we also have options where we can use alternative credit forms, such as your cell bill or your insurance payments, et cetera, in order to kind of fill that need. Next slide. So, excuse me. So we have everything from purchase programs to refinance programs to cash out, releasing equity. On a purchase program, as I said, there's no US credit required. So basically, we'll use your credit from your home country. Foreign income is allowed and accepted. What makes us very unique, because we're doing loans with borrowers from Sydney to Shanghai to Sao Paulo, wherever they may be, we're not going to trouble you with providing 2 years of tax returns, your NOA, your pay stubs, all of these things that would require translations, etc. All we're going to require is if you're going to go what we consider full income. If you're employed, we want a letter from your employer. If you're self-employed, it's a letter from your accountant. And it just needs to state your last 2 years' income and your current year to date. And that's it. That's sufficient enough for us when we're looking at underwriting your income. For all borrowers that are foreign nationals, you can qualify up to 75% loan to value. There is a minimum loan amount of $150,000. So it would require you to purchase a property or refinance a property. The value would have to be around $220,000. But, you know, as both Steve and Dustin mentioned, that if you're taking a look at Florida, for example, that's quite easily obtainable. And for a property that, you know, depending on which country you're living in, is going to be, you know, maybe something with a swimming pool or, you know, a view of the ocean or whatever it may be, there's a lot of value for the dollar there. All of our programs are very easy to qualify for. So our approval rate, once we submit your loan, is 97%, which means we're going to close almost every loan that we take in. The only times really we have an issue where the loan doesn't close is more in the case of, you know, a problem with the property, the title, the value, whatever it may be. Next slide. Steve, next slide. There we go. Okay, so the required documents for a mortgage for a US property is a US mortgage application. And again, we try to make this very simple. We have an entire team that all they do is take mortgage applications and collect the relevant documents depending on the loan program. So US loan application takes 10 minutes to fill out. Credit report from your home country. We have links for pretty much every country that you can imagine that has credit. So we can send it to you. That's quite easy to obtain. 2 months of bank statements. The bank statements or funds or whatever you may have to show needs to show the money that you're going to be using as a down payment, as a purchase, and that you have reserves. And, you know, normally it's anywhere 3 to 6 months. We want to see that you have, excuse me, that you have mortgage payments in the bank in, you know, the event that you would lose your job or something like that. There's no encumbrance on that. It just needs to be seen. You need your passport, the proof of funds, the income letter. This is actually quite nice. If in the event you make much more than you actually declare, you know, say you're self-employed, you have lumpy income, whatever it may be, we also have loan programs where you're not required to show any personal income documentation. So we're going to ask you for everything that's on that list, except for the income letter. What we'll use for your income when we get the appraisal of the property, and, you know, Dustin and Steve can actually help when they're searching for a property to make sure it meets these needs. But we're only going to qualify you off of the rental income of the property. And it's a 1-for-1 dollar amount. So as an example, if the mortgage, taxes, insurance, and HOA come out to $2,000 a month, your rent is $2,000 a month, bam, you qualify. So it's a really easy way to do it. And it makes, where we get that 97% close rate. Next slide. The process takes about 30 to 45 days from the accepted offer. And I'm sure, Dustin is cringing right now with the 45 days on a closing in Florida. We can do it possibly quicker. It just depends on how we're going to sign the closing documents. What makes us very unique, as a company, we don't deal with any borrowers or any clients in the US. All of our clients are living somewhere abroad. So all of the issues that you would have working with a local bank or a local mortgage broker in that area, you're certainly not going to have with us. We have everything dialed in from where to sign, when to sign, to make the process as quick and as smooth as possible. So the first thing you want to do when you're looking to purchase any property is to get pre-approved for a loan. It's for a couple of reasons. One, you want to make sure that you're going to get the property before you put an offer in and a deposit, right? That you may not be able to get back. So once we get your documents, it takes us about 72 hours on average to run it through underwriting and actually get you a lending approval. This is much better than actually getting a pre-approval where a loan officer would look at it and say, okay, I think this guy qualifies. This is actually coming from the lender that's going to deploy the funds, and he's going to say, yes, everything is done. All we need is the property to fill up the contract. So you put an offer in on a property, you get the accepted offer. We get the full underwritten approval based on the contract. We order the appraisal. Now, when we're going through this process, the only money out of your pocket for the mortgage portion would be the cost of the appraisal. And it really depends on which state and the value of the property. So you're on average, you're probably looking at $700 for appraisal cost. We do try, because the markets are very fast moving right now. We do put a rush on almost all the appraisals. So there's a little bit of premium to it, but we get the appraisals much quicker than most brokers would. Once we get the approval, we go over it with you. You get a copy of the appraisal. We go over all the underwriting and clearing the condition. We arrange the signing of the closing documents. You do not have to leave whatever country you're in. You can sign it in 4 different ways. One at the U.S. Embassy. If the country is part of The Hague, you can sign with an apostille, which is basically a notary in country, and then they send it up to the High Court. They get it stamped, and it's just as if you were to sign it in the U.S. 3 would be travel to the U.S. I mean, that's always an option. And 4 would be a power of attorney. So basically, you authorize somebody in the U.S. To sign on your behalf. It's normally a trusted advisor or family member. The loan funds, it closes, and you get your keys, and Dustin brings you over a bottle of champagne. Next slide. So I think that's it. So again, as a company, American Mortgages, excuse me, our only focus again is foreign nationals and expats. So if you're an expat, we try to make it exactly as if you walked into a U.S. bank. You don't need W-2s. Foreign earned income is okay. So all of the issues that you would have, you're certainly not going to have with us because this is our expertise. As a foreign national, you get up to 75% loan to value on a purchase, 70% pulling out equity. All of our loans are amortized over 30 years, regardless of the borrower's age. And this is something that the US is very unique. I don't care if you're 19 or 99. If you want a 30-year mortgage, you can still get a 30-year mortgage. We even actually have 40-year mortgages. So we have 10-year interest onlys that convert into a 30-year fix. So if you're looking to really optimize yields, it's a great program. So, we have loan officers in 9 different countries, I believe. So there's somebody in your time zone, so you're not having to worry about staying up late. And we can get you a pre-approval for any of the properties that Dustin and Steve featured, or anything else that you might be interested in. within 72 hours, and then you can go shopping. So thank you very much for your time. And I think we'll have a short Q&A. So if you have questions, just put it into the chat and we'll answer it individually.
We have 7 questions so far. I think the first one is for Dustin. Would you like to read it out? Just press Q&A.
Sure. Is that the one about regarding gated communities?
Yeah, I think they're talking about one of the properties in Florida.
Okay, so all these properties are not in gated communities, and it really depends on the which community you're looking in. When it comes to investment properties, I usually search out properties that have the highest return. And in these gated communities, the HOAs are quite a bit higher, which lowers your return. So if you wanted a property in a gated community, we could definitely find that. But if we're looking for higher returns, they're usually not in the gated communities.
I think the next question is for Robert.
Hi, I am a first-time investor and I would like to know how long the mortgage tenures are typically. So yeah, that's something that I just discussed. Again, the US is a very, very unique place. You know, you cannot discriminate against anything in the US, and that includes age. So again, whether you're 19 or 99, the amortization for a typical US mortgage is 30 years. As I mentioned, we have a very strong investor loan program where the loan is fixed for 10 years. It's interest servicing only for the first 10 years. After the 10-year period, it converts into a 30-year fix where now you're paying principal and interest. So you literally have a 40-year tenure. You know, and as what Dustin was mentioning, this is a fantastic loan because especially if you talk about Florida, as people are just flooding into the state, there's going to be a lack of inventory. As interest rates rise, there's going to be more and more renters. And, you know, if you have a fixed rate over this, you know, the entire tenure of the loan, you can really optimize your rental yield as the years come. Good retirement. Yeah, I think the next one is me. Is there a minimum loan amount or minimum property value? So the minimum loan amount for us, for most programs, is 150,000 US, meaning that if you're at a 75% loan to value, you're going to have a value of a property for at least 220,000. Maximum loan amount, we have none. You know, we've done single family residence in California that was 70 million. So there's certainly a wide range from 150 all the way up to 70. So yeah, somewhere in between, you'll certainly be able to find a property. I guess this is me again. I'm not a US citizen and I'm self-employed. Am I still able to get a US mortgage through you? Absolutely. You know, I think because most of our clients, well, not most of our clients, all of our clients are living somewhere abroad and they're buying a property outside the country they're in, they're, you know, a little bit more affluent than maybe somebody that is, you know, working and living in Florida, you know, a 9-to-5 job. So a lot of our clients are self-employed. The issues of lumpy income, you know, foreign tax returns, et cetera, we've overcome all of that. And that's why we've gone to this, this uniform letter that makes qualifying actually quite easy. So if you're self-employed and your accountant can verify your income, absolutely perfect. In the event you can't verify your serviceability and you want to buy, you know, that property that Dustin was showing that was, you know, $3-point-something million, perfectly fine. All we're going to go is off of the rental roll. So the rent that the property is receiving, that will be the income that you use to qualify. How is the loan service? Can I pay my mortgage in Hong Kong and local currency? Unfortunately not. All of the loans are onshore. So it's all done with a US lender. The loans have to be paid in US dollars. However, you know, it's just like anything that you were to, you know, to buy. If you're making a payment from Hong Kong, absolutely possible. It's just the currency conversion that you have to be concerned about. But yeah, I mean, it's a normal US So, or actually, this is a client that just closed with an apostille. So can I confirm that we can close with an apostille? Yeah, well, yes, it depends on obviously the lender, the state that the property is in, and sometimes actually down to the county. So some places will allow an apostille, others won't. But I think in your particular case, it actually worked out. So. Do you have partner realtors in all states? What about Washington State? I think Steve, I don't know if you have.
Yeah, I have partners in different states. So if you're looking at Washington State, certainly reach out to me. I can look for that. I mean, I had a one client, for example, who was looking in Washington State, and then I said, okay, well, I think it was. I got and I said, okay, well, how about buying something in, because they wanted yield, right? So, I got a seven bedroom house for about 250 somewhere else. So they were quite happy with that. But it just depends on what's available. But yes, Washington State, I can assist with, yes.
Next question. Curious, you mentioned that I do not need to have U.S. credit to invest in U.S. real estate. How does this work? Again, because all of our clients are living outside the U.S., we have programs that allow you to use your local credit. So, for example, if you're in Singapore, using your Singapore credit report is the same as if you had a U.S. credit. But again, in the event you don't, then let us know. I mean, we have a lot of U.S. expats that have been abroad for many, many years, and they just no longer have a U.S. credit footprint. So a lot of our clients are what we call bank fallouts. So they've gone to Bank of America, Wells Fargo, whatever it may be. Even as a U.S. citizen, they may make exceptional income, but without U.S. credit, they're just basically dead in the water. They can't qualify for a loan. Our programs, if you're a U.S. expat and you do not have U.S. credit, now not having U.S. credit and having bad credit, two very different things. If you don't have U.S. credit, we would look at you as a foreign national. So you would instead of 80% financing for a U.S. expat with credit, you would qualify for 75%. But what makes this super unique is you are a U.S. citizen. So once you start reestablishing your credit, in 36 months or so, it's quite easy to put you back into a standard U.S. expat loan. I think this one might be for Steve.
Which one? The U.S. bank account?
Yes.
Yeah. So with U.S. bank accounts, they can be a bit tricky, as you're probably aware. Now, for example, in Hong Kong, there are companies like Currency who can set up a virtual account for you. So they can then link it to a US account, which is onshore. So that's one way of doing it. But certainly, yeah, we can assist in opening up a virtual account. But most accounts for a US bank like Bank of America or something like that, you usually have to go to the US to open them up because they'll want to see you and things like that. So that can be a bit frustrating. Before a few years ago, I was able to do that quite easily. You didn't have to even sit in the US, and I could set up a US bank account. But as with everything, things have tightened up. So that's a bit more difficult now. So typically we do the virtual accounts.
Great. So another question: what is the lowest interest rate? The interest rates are exactly what they would be in the U.S. So if you're an expat, it's going to be identical to whatever the current rates are. If it's a second home, so your intention is not to rent the property, your rates could be in the 3s. Rates are going up. If it is a foreign national and you're at the highest LTV, you could be in the 5s. If you're at lower LTVs and you're a foreign national, you could be in the threes. So there's really a wide range, but there's no markup due to the fact that you're living abroad. The rates are identical to what you would receive in the US. And actually, I have to say, because again, this is our only focus, I would say the rates and the programs that we have are far superior to what you would be able to get if you started calling around to the banks, because we've already done this process for you. We know what the good programs are. You know, as soon as we talk to you, we have a very good gauge of where you fit and what LTV and what program.
And can I just add there, Robert? I think,
Yeah, sure.
you know, having dealt with more, you know, US mortgages from US banks directly, in my own experience, right, it can be a very daunting task to try and do that. You know, usually have to go there in person, and then the processes are quite complicated. I remember one time it took 3 hours to sign all the paperwork at the end. You know, it's not an easy process. So I think, you know, American Mortgages really has a niche there in the market.
Yeah, thanks, Dave. I agree, and you know, probably 20% of our business is bank fallout. So it's, you know, somebody that had put an offer in on a property, and they were at, you know, the very last stage. They had paid for the appraisal. They had done all of their work, you know, stayed up late, you know, in order to coordinate with the lender. They get to the very end, and it's, oh, I'm sorry, you don't have U.S. credit, or you don't have U.S. income. And these are things that all should have been sought out in the beginning, but most banks and most brokers or online portals, they follow a process. So they need to get all the title, they need to get all of these things before the loan ever actually gets to underwriting. When it gets to underwriting, it's like 10 days before it closes, and the underwriter says, "Oh, sorry, we can't do this." And that's probably 20% of our business, and it's very frustrating for the borrower. And we can assure you that's certainly not going to happen on our side. Okay, I think this one is for you, either Dustin or Steve. Since we don't live in the US, who would help manage the property?
I can take that one.
Yeah.
We do partner with some really good property managers here. And we try to make the process as seamless as possible. So they handle everything from finding a tenant to managing the tenant if there's any complaints. So you don't have to worry about that at all. And I see another one on here is, how much does the property manager cost? Usually they charge between 7 and 10% of the rental price. So, but like I said, we try to make it as seamless as possible. And I know Steve mentioned too, when you're going through the process, we get everything set up with inspections, coordinating the appraisal with the lender, and yeah, so we try to make it very seamless for you.
Yeah, and I think that's part of our sort of unique process, is the fact that we've been dealing with, you know, expats and, you know, people from overseas investing in the US for a long time. So we know the sort of issues that can crop up, and of course, particularly property management, you want to make sure the rent's coming in every month, or, you know, there's something broken down, and, you know, for example, in Florida, you know, you have to have the air conditioning working, otherwise there can be a real problem, right? So you know, those are fixed. And so on time, so you get good reports back from the property manager, so your property is well looked after, and I think that's very important for peace of mind when you're investing from overseas.
Definitely, I agree. Question: are you penalized if you pay off the loan early? So most loans for foreign nationals, for expats, not normally, but for foreign nationals, most loans will come with a 36-month prepayment penalty. That prepayment penalty is normally 6 months of interest, or depending on the lender, it could be 80% of the 6 months of interest. So just assume that if you're going to sell or refinance the property, there could be a penalty. Now, after that 36-month period, there's no penalty. So you can choose to do whatever you want without having to incur any penalties. Next question: is there any change currency services for a loan in the US dollars and rental in France in euro, for example?
Okay. I'll take that one. Okay. So as I said, there are a number of opportunities with companies like OFS, or or there's also the currency.com. So those are they have an online accounts, and they can be set up with multiple currencies. You can set up an account, for example, with a local account in the UK. You can have an account in US. They have a number of options there. So there are opportunities for that. And then, for example, if you have you'll have a full range of foreign currencies that you can switch between. So if you're getting money in euros, US dollars, whatever, Hong Kong dollars, etc., you can move them around in your own account. So it makes it very easy for transactions.
And that, that's, again, the good thing about dealing with somebody like Steve and Dustin. Again, because they're only dealing with very similar clients as we deal with, which is foreign nationals and expats, all of the issues and the questions that you have, they've likely have already seen it. And, can take the time to explain it and make sure that it works because they've done it in the past. Okay, is obtaining a pre-approval to see how much I can borrow free of charge? Absolutely. There's no cost for the pre-approval, except for your time, of course. And even through the entire process, our fee is, somebody asked another question as well, like what is our fee? We charge 2% of the loan amount, which is very standard in the US. Again, we don't mark anything up because we're overseas, but that fee is a success fee. If your loan doesn't close for whatever reason, you don't have to pay us anything. And many lenders that we have, not all of them, but many lenders that we have allow you to embed whatever the broker fee is into the loan. So for example, as a foreign national, you can get up to 75% financing. But if you were to finance the 2% fee that we have, your LTV could actually be 77% without affecting the loan to value. So it's a really good way to be able to kind of optimize your free cash. I think this would be for one of you guys. Are you required to use US your property managers? Yes.
Well, I'll let Dustin take that one. But from my perspective, people if they don't want it to use their property managers, they can use someone else. But Dustin, over to you.
Yeah, I agree with that. If you have a property manager that you've used in the past, or you already have a relationship, feel free to use your own property manager. We've built relationships over the years with property managers, so we know who does a really good job and who doesn't. So we do recommend the ones that we have worked with in the past, but it's definitely not a requirement.
Yeah, I mean, the ones that we like to use are those who provide also detailed accounting. So they give monthly statements and then also the tax statements. So then makes it easier then for the accountant to do the tax returns to the IRS. So what we try and do is make the whole process for an overseas investor easier.
Very good.
Yeah.
Next question: do you finance cash out refinances for properties purchased in cash or properties with good equity? Super good question. We get this a lot, especially when the markets are super hot in Florida, or California, wherever it may be. People will tend to pay cash so they can get the best offer, or they put in the best offer for the property. If in the event you were to do that, as long as you refinance the property, so basically you're going to pull the equity out within 90 days, we call it a delayed purchase. So we look at it as exactly as if you were to get a loan on the purchase. So when you're refinancing a property and you're pulling cash out, there's a little bit of premium in the rate. The lenders will charge a little bit higher on the rate. It's very little, maybe an eighth to a quarter, but you wouldn't have to pay that if you were to do cash out refi within 90 days of a cash purchase. So certainly we can do it. It doesn't, if it goes beyond 90 days, perfectly fine, but it then is treated as a traditional refinance. And then properties with good equity, absolutely. If you're an expat, you can pull up to 80% out. If you're a foreign national, you can pull out to 70% of the appraised value, of course. A question, do you propose home equity loan? If yes, what LTV? Unfortunately, again, because we're dealing with a very specific and niche market, which is the foreign nationals and expats, we do not offer home equity loans. If it's a matter of pulling cash out, we can certainly help with that, but we don't have any mezz financing. Another question, how many mortgages can I have? As really, it's pretty endless. Some banks will limit the amount of mortgages that you can have as an individual. So I would say probably on average, an average lender, an average bank will restrict it to 5. So, they only want that exposure. But what makes us very unique, we do residential, commercial, portfolio, bridge. We cover the whole gambit that you would need in order to do this. And one of them is the portfolio programs. So with the portfolio programs, if you have at least 5 properties, and there has to be a minimum value of at least 500,000, then we can do the loan as a portfolio. So just to kind of give you an example, and this is like, one of our better clients, a client in Hong Kong has over 400 units in the Atlanta area. So, it's on a portfolio loan. It's quite easy. And whether you have 400 or 4,000 or 4, or I'm sorry, not 4, you have to have at least 5. Then you can look at these portfolio transactions. What makes these super interesting too is once you're over a value or loan amount value over $2 million, it no longer is a matter if you're a foreign national or an expat, you're a US citizen living, you're going to get the same rates. It's only going to go off of cash flow. So portfolio programs are absolutely awesome, especially if you had to write out 400 checks every month. It's a lot easier to do one.
Yeah, that'd be a lot to do.
If anybody's still writing checks, of course. Then. Okay, next question. If I were to refinance, would there be a penalty? Why would an increase in the loan come with a penalty? I don't know what loan you have. I mean, we're happy to look at your current loan documents. I don't know if you have a prepayment penalty that is in your loan, but we can certainly look at it. If you do, unfortunately, there's really no way out of a prepayment penalty. But if you look at, I think what both Steve and Dustin explained, the property values have increased so much that, 6 months of interest or whatever your prepayment penalty may be, at times it may be worth it to be able to pull the money out or to lower the rate, and we can figure out a break-even point for you. So absolutely, it's definitely worth exploring, even if you are in that prepayment penalty period. So there were some questions in the chat. I'm not sure if you guys can see it, but this one would be for you, Dustin. It says, for a new build house, how long is the builder's warranty typically valid for?
So every builder is going to be different, but across the board, it's pretty close to 1 year. It covers everything in the house, including cosmetic works. And then your mechanical issues, including your air conditioner, is 2 to 5 years. And then the structural warranty is about 10 years. So if something were to happen to the foundation of the house, the builder would still cover it for up to 10 years. So those are pretty typical, but it is going to vary by builder.
That's great, actually. Okay, there's another question that says, does a 25% down payment go to American Mortgages or to an escrow account in one of the banks that you deal with? So I think Steve had mentioned this in his presentation. No money is ever sent to us or to Steve directly. Everything, depending on the state, is either done through a title escrow agency or an attorney. So these are insured, they're trusted, they're established. If it's Dustin or Steve could set one of these up for you. If you're doing a refinance, then we would set that up for you. But absolutely, there is no funds that come directly to us.
Yeah, thank you, Robert. Yeah, we don't accept the deposits and all that sort of thing. They go directly to the title, etc. So It's very
So
clear.
I think this would be for one of you guys. What is the rental income tax rate for foreigners?
Now that's a good question. So that's going to depend on the. That's a bit of a complex question. So it depends on a number of things. So firstly, the normal rate that you would pay would be, of course, according to the US income tax rate. You may not pay it, so that depends then on the income that you're getting in the US. Then if your country, for example, has a tax treaty with the US, then there's no double taxation. And in addition to that, there may also be no withholding tax either. So, and that's one of the reasons why we use LLCs as well. So that it's a bit of an interesting question, but usually you're going to be paying the same sort of rate that an American would pay at that income level, that just from the income based in the US, not your global income. Okay. So, but if you want to go into more details, more than happy to put you in touch with an accountant who can go through those with you.
And I think, Steve, we hear this all the time. I think there's a very big misconception of what taxes are in the US. If you were to compare it to Australia or the UK, which are big, investment places for especially people in our region. I think, especially again, when you talk about investing into US real estate, I find from our research and from talking to clients, the US is actually far better when it comes to taxes. There's no stamp duties. There is FERP to tax if you sell, but capital gains tax can be deferred in a 1031. I mean, there's all, US real estate is, that's the lifeblood of America. So they, there's no
great. That's right. I love it. And
it's perfect. Right?
Yeah, and I think this is the thing where a lot of people have a perception, I'm going to be hit with all these huge taxes. I'm going to be overwhelmed with tax, and if I don't report, the IRS is going to come to my house and knock down the door or something like this, right? This might be a perception, but it's not true, right? So the thing is, and this is what I was talking about in my presentation, that people don't understand the low cost of buying in the US compared to some other places. There's no land tax, there's no, as such, there's no, or very little, of course, that depends on which state. I'll talk about Florida, okay? So in Florida, there's no such thing as really as land tax, there's stamp duty, all these sorts of things, which can be very expensive in places like the UK, Australia, very high, and also very expensive to hold. Whereas in the US, all you're going to be paying is, your normal rates, your county taxes, and then also your federal tax, which the accountant files for you. You can claim quite a lot of deductions on those. For example, in Australia, they got rid of deductions for visiting your home, whereas in the US you can go and visit your investment property and you get a tax deduction for that as well. So it can be, we tend to have a company meeting in the US every year. What a joy that is, right? So and that's all tax deductible. So we can go to Disney and Universal, and it's paid for by the taxpayer. Excellent, right?
I think if you Steve and Dustin, you guys have awesome accountants that focus on these types of borrowers. So, it's certainly worth exploring because, again, I think if you compare apples to apples, if you're like London to Orlando, you're going to find the tax consequences in the US to be significantly less. So here's another question. In the lines, the lines are serviced in the US. This would mean I would need to open a US bank account and pay high US fees to transfer money. No. This is actually, again, quite unique with us. We understand that a lot of borrowers, they want the exposure of having US real estate, but they don't want the exposure of having a US bank account. you are, I mean, again, it depends on the lender, but if this is your situation, and when we talk to you from the get-go, we have banks and we have lenders and we have programs which do not require you to open up a US bank account, which, if you want the US exposure in real estate, fine, but you don't want the US exposure on a bank account, absolutely fine.
Yeah. And as I said, there are other ways of having a sort of a US bank account, but not opening one from a US bank. So yeah. it can be done.
Yeah. Again, dealing with, the experts in this type of market is, the way you want to go. If I buy a rehab property, increase NOI for commercial, add value or refinance after 3 to 6 months, is there a minimum season period of refinance? Absolutely excellent question, because we get this all the time. In the US, you can buy a property very cheap. I mean, very, very cheap in certain places. Fix it up and definitely add some value to it. For us, if you wanted to pull the cash out or you wanted to refinance, within the first 12 months, we would only be able to do what you purchased the property for. Depending on the lender, they may be able to add what you spent on the renovations, but normally that's not a significant amount. After the 12-month period, then we look at it as a brand new refinance. So whatever that appraised value is, then that's what we would go off of the refinance.
Yeah, and the other thing too is that we do rehab projects. So say for example, if a place is a bit run down, I mean we've seen that with some foreclosures and short sales where they might be a little bit need some fixing, let's put it that way. Then we can do that, add value to that particular property, and then resell that later down the track at a higher price, or you can increase the equity and then get reappraised.
It's something quite unique, Steve. We just started offering this before in nationals, that we can do fix and holds or fix and flips before nationals, which is something that was never able to obtain before, but we really kind of fought for this with some of our lenders in order to be able to offer it to for nationals. The only key is you have to have experience in doing this. So there's a little bit of a catch-22, but if you do have an experience, and it has to be in the US, that you've done some of these, then you can qualify very similar to what a US citizen would qualify for.
And we've done a number of these types of properties, where they've been fixed up, etc., and then improve the value. So if people are interested in that, I mean that'd be a great facility. It really would be.
Oh, absolutely. That's fantastic.
Yeah.
It looks like the last question is, can I get a mortgage in an LLC? Absolutely. Matter of fact, some of our lenders prefer that you actually get a mortgage in an LLC. So you have two options. One, you can get a mortgage as an individual, which is fine. So the vesting or the ownership of the property would be in your name. Or two, the ownership or the vesting of the property could be in your LLC. But either route, there still has to be a borrower. So there has to be somebody that's actually responsible for the mortgage. But how title is held, it's entirely up to you and whatever your goals are with the property. So, there's more questions.
And we can assist with the setting up the LLC and also getting their tax IDs as well.
Perfect. Do you allow seller financing to fund the down payment? Unfortunately, we do not. And this is mainly due to, we try to make all of our loan programs to be very common sense underwriting. Right. So, as I explained earlier, you use these income letters to qualify rather than, having to translate your tax returns and so forth. Or you can qualify by just using the rental income. But the banks and the lenders that we deal with on these specific things, they want to see that you have a vested interest in the property. So they want to see that you've come in with your own money. And if there was seller financing, basically, I mean, this was very common back, in the bad days, where seller financing, you basically walked in without ever paying anything out of your pocket for the property. That's just, unfortunately for us, we do not allow that. Jason Moore. Can I see the contact details of the gentleman wearing the glasses?
Is that you, Robert, or me?
Well, he said gentleman, so it must be you.
Okay.
Dipti will.
Yes, I will be adding all the contact information for the 3 speakers on the thank you email. So not to worry about that. You can ask them any further questions there.
Thank you, Dipti.
Yes. Next question, could the loan be on 3 people? Could I go in with 2 other investors to get a mortgage? You can. Each application is separate. Normally, say you have an LLC with different members. Each person would have a separate loan application, so each person technically has to qualify for the mortgage. So yeah, certainly you're allowed to do that. If you're looking to, acquire more and more property, probably the easiest route or the better route would be having all those members of the LLC, but buying the properties individually. That way, you can accumulate more properties for the lenders. So, but yeah, absolutely. Just give one of our, reach out to us, and you can give one of our loan officers a call, and they can explain how to do it. So, another question. I like the fix and flip loan idea. We are doing quite a few fix and flips, then to refinance. We should talk. Absolutely. So,
Good.
This is an existing client, so just reach out to Phil, and he can certainly help you. So, all right, I think that is everything. Steve, Dustin, you have anything you want to end with, or Dipti, or?
No, just like to thank everybody for attending, and appreciate the opportunity to be able to talk to everyone today. Thanks very much.
Yeah, thank you so much, guys.
Thank you, Steve. Thank you, Justin. We'd especially like to thank you guys for partnering with us on this. And I'd like to say thanks to everyone for joining in today. And like I mentioned before, I will add Robert, Steve, and Dustin's contact information along with our ebook link on best cities to invest in the US. In our thank you email, it should come in by tomorrow. I'll also add a link to the video so you can watch it again if you need to. And you can feel free to ask them any questions you have directly. And thank you for
everyone
once again, and have a great evening. Bye.
Bye, everybody. Have a great evening. Bye.